Binqi Liu, why would Americans want to own emerging market debt when you're seeing Treasury yields tick higher and some members of the Federal Reserve grow a bit more hawkish?
Well, we think that U.S. Treasury yields actually will stay around the current range, and the whole fear of this tapering fear, what will be the impact to emerging market has already been priced in by the market. That's why we saw the sell-off in 2013 and then to some extent the sell-off in the beginning of this year.
And what about the Chinese economy? We keep hearing about the possibility of a hard landing because we've seen the data. It is slowing. Are you worried at all about that?
Well, we have our base case scenario of not hard landing. Actually, China, the policymakers have ability to sort of make sure that the economy is going to grow around 7 to 7.5%. So they have monetary policy tools, they have fiscal policy tools if it's needed.
All right, with that in mind about what's going on with the U.S. economy and the Chinese economy, what are your favorite emerging market bonds right now?
For external debt, we like the investment grade countries. With them you can take advantage of high spreads at this current level and also the very sound fundamental of these countries, so you have very little probability of default. On the local currency side, we like currency opportunities coming from the fragile five countries, because after the sell-off in 2013, these countries are much cheaper in valuation, and fundamental-wise they start to improve in the current account balance, for example, and also policymakers started to implement more sensible policies to improve their economy in these countries. So we do think that, and with lighter positioning, there are opportunities come from these fragile five countries.
And those fragile five companies are Indonesia and Brazil and Turkey and South Africa and India. But with regards to Turkey, there's been some problems there. There's been some problems in Argentina. You're not worried about some of these flare-ups in the emerging market affecting emerging market debt as a whole?
Well, yeah, we do differentiate these countries. We don't really think we should compare Turkey with Argentina or Turkey even with Ukraine. So in this case, we do like Turkey because after some headline risks, the valuation in Turkey is quite cheap, but fundamental-wise, it's a very sound country. Well, other countries like Ukraine and Argentina, we actually stay away from them because we do think that there are a lot need to be done before we start to think that these countries are relatively safe to be invested.
All right, we're going to trust the fragile five. Thank you, Binqi.
Thank you.
And thank you for watching The Street.